The broadcast is now starting. All attendees are in listen-only mode.
Turn off your camera.
Hello and welcome to this special event, The Impact of the Fed Interest Rate Cut for Small Business Owners, a discussion with Biz2Credit's president and co-founder, Rohit Arora. Today's webcast is presented by Biz2Credit. The program will begin promptly in a moment, and a recording of today's webcast will be made available both in the Biz2Credit Webcast Center and on our LinkedIn page if you're following us live on LinkedIn after the conclusion of the session. We'll be getting started in just a moment. And good afternoon, LinkedIn, and those joining us here in today's session. Today we are going to be talking about interest rates with Biz2Credit co-founder and president Rohit Arora. A little bit of a last-minute reschedule there for Rohit to join. Rohit was occupied in another urgent matter. Before we begin this session, please note that during this webcast and any answers that are provided by the participants are meant solely for informational purposes. They are not to be considered substitutes for legal or tax advice. Business loans and other federal lending programs for businesses are not guaranteed and are issued at the sole discretion of the lender, either in conjunction with their own underwriting guidelines or with SBA and other governmental agency guidelines where applicable. The views expressed in this session do not necessarily reflect the views of Biz2Credit, its affiliates, or partner companies that may be mentioned in this webcast. We'll begin today just by looking at a quick agenda for this session. And of course, we are focused on the very important and timely topic of the impact of the Fed interest rate cut for small business owners right now. We are just over a week removed from when the Federal Reserve made that announcement. And so we want to make sure that we're going to speak specifically to what this means for small business owners, as well as some practical advice and tips on how business owners can respond now that this new rate environment has finally emerged after, well close to 18 months of Fed rate hikes. We'll also talk about funding opportunities that exist both for business owners in general and immediately subsequent to this Fed rate hike. And we will have some live Q&A. Rohit will be taking questions that were submitted to us ahead of today's session from some of the business owners in our audience. So if you're checking in and interested, please do put your comments down in the LinkedIn comments section, and we'll be getting answers to some of those as well as to questions after the fact once we conclude today's session. So now, I think with no further ado, it would be great to bring in our main speaker for today, Mr. Rohit Arora, the co-founder and president at Biz2Credit, where he will be able to provide us his insights with small business owners dealing with the current Fed rate regime and where things are going in the next couple of months in the economy. Rohit, welcome. Thanks for being with us for this afternoon session. I think we may be having a little audio issue there. Can we try that one more time?
Yeah, Charles, thank you for having me, and thanks for organizing this very timely panel.
Excellent. Thanks so much, Ramit. And again, really glad to be out here for everyone on the LinkedIn channel. Ramit, tell us a little bit as you just start off with your reaction to the news that was announced last week about the Fed interest rate cut. The 0.5% reduction was larger than some people had anticipated from this most recent activity from the Fed.
So I would say that the interest rate cuts were very timely, because we had one of the largest increases in interest rates in a very short time frame. When the Fed started raising the interest rates, and because of that, the borrowing costs had gone up significantly. Prime rate climbed from 3.25% to 8.5%, and that really created a huge impact, especially on SBA loans. Most of the SBA loans are variable rate loans, and so the borrowing cost for an average business person went from 6% to almost 10-11%. So it was a huge impact on small businesses, their cash flows. If they were planning to make investments, it became tough for them to get financing at that rate, or consider how this new opportunity, or if let's say they were planning to buy a building, how would that cash flow? So I think it created a lot of issues for small business owners. The second thing it did was that the housing market slowed down significantly, and people in that industry have been severely impacted as well. And overall, I would say that the liquidity available for small business lending, a lot of the community banks and larger banks stepped away, especially after the Silicon Valley Bank and First Republic collapse. They really backed away from doing a lot of small business lending. So this interest rate cut is very timely, very welcome, and hopefully it is in the right direction. That will provide. It'll have a direct impact on lowering cost of SBA loans, which are variable rate loans, if people have already taken it. If they're planning to take fixed rate loans, then those will also become cheaper, whether they are SBA or conventional loans. And I would say that small business owners will definitely see that this interest rate cut will hopefully drive more economic activity overall in the economy, and then will also result in some sectors like housing, which I earlier mentioned, gaining steam. We have already seen refinance applications up by 20% in the last 1 week, and this will hopefully set the direction for the housing market to come back, because a lot of industries associated with housing, like construction and other building supplies and other very critical industries, were very severely impacted. So that is so in a nutshell, it will help drop the borrowing cost directly for the small businesses, while also driving hopefully higher demand for small businesses.
So two really good outcomes that business owners can expect. But what about if we just talk about the reason that the Fed had been raising rates in the first place, this very high inflation that had come in after COVID? Do you think, and have you seen the evidence that the Fed has indeed crushed the impact of inflation on small business owners, or are business owners still feeling some of those effects even as this rate cut comes into play?
Inflation has definitely come down. We have seen that, in a lot of segments or industries, where small businesses were sourcing products through whether they were importing it from China or they were sourcing it locally, costs had gone up significantly. There are some costs that are still high, that are beyond their control, like wage costs, and if they are a restaurant business, food costs have definitely spiked up over the last few years. So those challenges still remain for small businesses, and I would say that overall inflation if it hasn't come down, the rate of increase has gone down significantly. So if the prices of groceries, food items went up in the last 3-4 years, they have stayed up, but the rate of increase has definitely slowed down. So I would say it's a welcome development in that sense. And the Fed had to raise the interest rates because they didn't have a choice but to contain the inflation. And I would say to a very large extent it worked out. But since the prices have gone up so much in the last 4 years, especially post-COVID, so people have felt the brunt of inflation, especially small businesses, because wage costs that have gone up cannot be reduced anymore. If cost of raw materials has gone up, that cannot be reduced. If you're a restaurant owner, if your food items cost more, it cannot go down anymore. And they can only pass so much on to the consumer. So I would say
Right.
that inflation has been a big bummer for small businesses over the last 4 years. And hopefully, as we see that the rate of increase has slowed down, so there should be some relief in the coming months for small businesses. And once this interest rate cut and the ones to follow drive more economic activity, I think people will start to feel better about their respective small businesses.
So it's good news in general for business owners
Yes.
right now. What are the steps and opportunities that business owners can take advantage of now that rates have come down by 50 basis points, 0.5%? Is there some step that you would advise, Ramit, for a business owner to consider as they now wake up this week, next week, and see that the cost of capital is going to be lower than it was a month ago?
So it's only a 50 basis points cut, so it's not going to make a very huge impact immediately. It'll take some time to filter through the system. But what it does is that it sets the direction that overall the rates will come down. We have seen the mortgage rates come down, so that helps the housing, construction, building activity. We have seen the rate of interest rates on any borrowing activity that they might be planning has come down or will come down. And I would say that they have to still plan out as nothing has changed. They have to still remain cost conscious, manage their cash flow, and then go from there to see the larger impact of this interest rate cut and the impending ones, and see how they can leverage that to grow their business.
And what about the steps that business owners should be considering with financing that they may already have in place? Is this the moment for a business owner to perhaps think about refinancing existing loans? And talk a little bit as well about how a business owner can go back and reassess their financial picture right now, in that they might have some loans, like an SBA loan, for instance, that are variable rate and have now come down in month-to-month costs right away.
Yes. I believe that interest rates, if they had a variable interest rate loan, then rates will automatically come down by 0.5% on their existing loans. If they have a fixed rate loan, unfortunately, they would not be able to get the benefit of the interest rate cut right now if they borrowed at a high cost. And if, for example, they're planning a new borrowing activity, they're planning to buy a building, they're planning to buy a business, they're planning to expand their existing business, my belief is that bank lending will definitely become cheaper. There will be lower cost of funds that is available now. So they should start planning out and looking for new opportunities to grow and expand their business, and keep moving in that direction.
Got it. And in terms of the planning for a business owner, very often this is a conversation that they need to be having with their trusted advisors, whether it's a financial professional, a banker, a CPA, or bookkeeper that they may be trusting in their business. What questions should business owners be bringing to those financial professionals right now and preparing, in their next meeting as an agenda?
So if they're talking to their financial planner or the CPA, they should be preparing for how they can grow the business while containing the costs, and they should be seeing that if they had any plans to grow and expand, now is the time to start planning and thinking about it, and seeing how they could qualify for different financing options, and get your tax returns filed. Especially if you're going to the CPA. Most businesses get an extension till September 15th or October 15th. So they should be, have their tax returns filed, their financials ready, or work with their CPAs to get their financials ready so that they can apply for financing.
Mm-hmm. I mean, and thinking about the expansion opportunities for business owners now, are you at all concerned that this drop in the rates might see inflation come back in some respects, or are business owners potentially at risk of seeing a repeat of the prior 3 years when rates were lower?
See, the economic activity has definitely contracted. What is challenging is for businesses that it is a very, I would say, sort of fluid environment right now, and what they have to do is to see that if they're planning to expand the business or trying to grow the business, that they have to focus on the right business opportunity, and figure out how it will help their business grow faster. And then they have to on the interest rate cuts, basically, everyone, what we are hearing and reading is that because of the interest rate cuts, the inflation might go back up early next year. So a lot of people are concerned about it. The price of gold has appreciated significantly. It was at $1,900 in December of last year, compared to close to 2,700 as of today. So gold has definitely appreciated, and it is an indicator that the markets expect inflation to again pop up early next year, because the belief is that with interest rate cuts, there might be another asset bubble. There might be more liquidity in the system. Again, things, we have seen that the stock market has already gone up. The S&P is now close to 5,700. So we have to basically, it is unknown what will happen, but some of the indicators show that inflation might go up. Like if you look at the 10-year Treasury yield, it went up after the Fed cut the interest rates. So again, it is a very volatile situation where you don't know what will actually happen, but there are some negative indicators that sort of show that inflation might go up early next year.
Right. So business owners, I think, who have been especially pressured by inflation need to be thinking about how to make sure that they're not too exuberant about this rate cut. But there are indications as well, Ramit, that rates may come further down. And as we turn to some of our audience questions, we had this question in from Scott from North Charleston, who indicated he's curious about how quickly we might expect rates in the real economy, you could say, to go below 5% as the Fed has begun to think about its next move of potentially an additional rate cut later this year. What's your sense of whether or not business owners will expect to see another decrease in rates, and how quickly do we think we could see that start to happen?
See, the Wall Street Journal prime rate is still at 8%, so that is one of the key sort of benchmarks for small business lending, especially in SBA loans. So that is still very high historically. So I would say that it'll take still at least a year, for rates to go back down below 5%. If you're going for a conventional loan or bank loan, you might be able to get a loan for around 6% right now. But going below 5% will take some time. And again, business owners, if they see a good opportunity, if they see an opportunity to grow and expand, then they should act on it now rather than waiting for rates to go down, because the opportunity cost will be much higher.
Right. So to that, I think that indicates, what should business owners think about doing for financing here and now? If they see that opportunity, what should that next move be? We had another question, this one from Emily in Edison, New Jersey, here in the Northeast. She's asking, should she be waiting to refinance for another interest rate cut, or should she be moving forward perhaps now that rates are going to be already half a point lower? Should she be looking at refinancing existing debts that she's got outstanding?
Yeah, I believe they have to look at their loan agreement. They have to see what kind of loan they have currently, and then decide on refinancing. Ideally, I would wait for another rate cut because that will happen in November or December. Then they should decide to refinance their loan, and that will have a higher impact or a bigger impact, if they're trying to save costs.
Yeah, and for many businesses as well, of course, we should mention that refinancing kind of gets built in if it's a variable rate loan, which I know is very often the case for business loans, right?
Yes.
So we have another question here from Tommy in Dallas, Texas, and he is asking the other side of this question that you and I just talked about before, Ramit, is will this lead to a rise in inflation? And if it does, how can that potentially hurt my business going into 2025? Are there any steps, Ramit, as you think about this question from Tommy, that you would be advising a business owner take right now to protect themselves from a potential increase in that rate of inflation?
So my sense is that inflation, as we have seen, had a very bad impact on businesses over the last 4 years. People were suffering from high cost of labor, high wages. They were suffering from high input cost on raw materials. Depending upon the type of their business. So it really did impact their business severely and adversely. Again, if the inflation loop comes back and we see rising inflation, it'll become pretty challenging for businesses next year. We'll just have to wait and see what happens, by end of Q1 of next year, and then see, that is the inflation as severe as it was, in 2022 and 23, or will it be just a short-term increase in inflation? But if it does increase, then we might see the same issues that because of high inflation, the demand also then goes down because people are not able to afford anything besides like basic groceries, and the discretionary income clearly goes down. So I think it'll have an overall very bad impact on a lot of small businesses.
And do you think, just sort of building on that idea, do you think that consumers who shop at small businesses, are they suddenly, now that this rate decrease has gone into effect, are they going to be more willing to spend? Are they opening their wallets a little bit more easily now with credit cards and so forth coming down in cost? Or is it going to take time for that still to trickle through and business owners to start to see it in their bottom lines?
It will take time. People are still very cautious. They're not spending as much money. What we have seen internally is that the spending levels have gone down in restaurants and other retail businesses. So we are definitely seeing an impact of a slowing economy. But the impact of interest rates cuts is never instantaneous. It always takes some time to filter down. So we will see in the next 2 to 3 months, if it really makes people more comfortable to start spending, or start looking at different things. So it's yet to be seen, basically.
Yeah, a story that we'll have to continue to follow, and of course we'll be bringing you updates along the way. If you aren't already and you're following us here, definitely follow our monthly economic updates newsletter for small business owners, where Rohit, our CEO, does provide a bunch of his insights timely for business owners to adapt to this changing economy. Ramit, want to thank you so much for taking a few minutes out. I know you have a lot of conversations with business owners to get back to later this afternoon. So we'll let you go here as we wrap it up. Thank you so much for being with us.
Thank you. Thank you.
And if you're still with us for a few more moments, we do have more insights for you from Biz2Credit that are available on our resource hub on our website, biz2credit.com. Of course, at Biz2Credit, we are committed to really helping business owners throughout their financial journey and to providing financing to more small businesses and helping business owners secure the best funding options for every project or capital need that they may be facing, especially these days with the combination of volatile rates and high inflation. It is important to have the right kind of financing in place. Biz2Credit provides the technology that makes business financing easy to understand, easy to access, and Biz2Credit is helping tens of thousands of small businesses every year to increase their cash flow and succeed. Our financing products include fixed rate financing options, which include a business term loan. And we talked in today's session about how a term loan with a fixed rate at these lower rates could be a great option for business owners these days. An online application on our website just takes a few minutes, so you can create an account on biz2credit.com, or you can call a funding specialist with Biz2Credit if you're interested in speaking to somebody about your financial situation. We have funding specialists standing by to speak as well. Happy to take those one-on-one. If you did have questions, of course, please post them in the comment thread here. Our team will actually be following up with those questions one-on-one to provide personalized support or guidance as possible for all business owners joining us on today's session. And of course, you can locate many of the resources that we provide at Biz2Credit on our website, biz2credit.com, especially by visiting the Knowledge Center section of the website, where you'll find helpful articles and guides to support you along your small business journey. At this point, we are just about at the end of our allotted time. The feed will stay active for just a few more moments before it finally concludes, and you'll have the ability to put in some of those last questions. Thanks so much for joining us for today's special event on the change in interest rates, a special series looking at the impact for small business owners of the recent Fed rate cut.